Deepak, maybe, just to start off, I would like to ask you, Deepak, if you could let us know a little bit about yourself. I mean, where are you originally from, and what's been your background, your educational background, and how did you get attracted to the stock market? I personally, I've read your book, by the way. So I know a little bit, but maybe for again for the benefit of the audience, if you could.
Sure. So, quick. Firstly, thanks for everyone for listening, and thanks, Kedar, for inviting me. A quick background is, of course, I'm an engineer. I have always been interested in programming and technology. I still am to an extent where I don't actually uh, write much code, but still fascinated by all the
Hmm.
stuff that's happening around me. So I come from a background. I mean, I did my engineering from a college in Karnataka. It was called KREC, now it's called NITK Surathkal. Uh,
Hmm.
and that was 25 years back. And then we started off in the tech field, started a company in the tech area about in 1998. And then this over time, I kind of sold that, moved on to the next one. And uh, eventually, this is Capital Mind has been, I think, my third or fourth actually startup. And over the course of time, I got attracted to fintech, algorithmic trading, technical trading, investing, quantitative trading, quantitative investing, and portfolio management. So it's been a journey that's kind of lasted many years. Some part of this journey, of course, I've articulated part of it in the book. I've articulated it in various other podcasts as well. So I won't generally bore the audience with the whole journey, but um, more important to me has been in the investing process the ability to look at all the data and analysis that we get from a public source point of view rather
Hmm.
than try and get any insights from a I know the founder, I know the promoter, I have talked to them kind of point of view,
Right.
and try to make an investing strategy based on that rather than try to base it on personal connections. And over
Hmm.
the last 15 years, India has also evolved to respect that a little more than earlier. It used to be like you had to be in Bombay, you had to
Yeah.
know the right promoters, you had to be golfing with people. So that has been the philosophy that's kind of driven me. And luckily, also the timing of it has been interesting because India has also grown to a point where such investing will actually work versus earlier it was just Harshad Mehta talking to some textile mill fellow and getting
Exactly.
some insights.
Yeah, yeah. I know. I mean, there was a time in India and even much before in the US also where a lot of your wealth creation was more to do with your connections, your insider tips, and all that. But I believe that's certainly changing. So I do get it. So you're saying basically your approach is more investing based on data driven approach as opposed to the personal connect element, which of course you would have built over your long tenure. But I get it. Hmm. Right. So Deepak, in your so you got attracted to the stock market, I understand, but within in this field, who are some of the people that you sort of look up to? As in, was there someone who sort of mentored you in your initial years? Anyone whom you have looked up to for guidance, or even today look up to someone? I mean, who's been your your guiding who's been your guiding force in this professional journey?
It's a tough question. I think no one person I would call a guru of sorts. A lot of people have given inputs. I think most of my inputs have come from people who are sometimes faceless, nameless in Twitter, on so various occasions. Very interesting discussions have helped me without sometimes the person knowing how much they've helped me. There were times when I read articles. By say on the RBI when I was trying to understand this whole macroeconomic frameworks and stuff like that that were written by say Ajay Shah at some point or some of the other people in the academic industry who don't know me and they won't even know how much I have benefited from that. But I
Hmm.
think that there are lots of such people, and whether you would call them. So, for instance, it would be a Paul Tudor Jones and some of his things. A lot of my inspiration came from the Market Wizards books that were
Right.
written by Jack Schwager in bits and pieces. I don't claim to follow completely any of the philosophies mentioned by any of the. I mean, so it's not like I'm disrespectful of them. I'm just they're not me. There's some part of I have some part of a lot of people's strategies, but
Hmm.
not the whole of any other than mine. So
Hmm.
in a way, this is you don't need a guru. You don't need a single guru. There's a Tina
Yeah.
Turner song that says, "We don't need another hero. You don't need to
Yeah.
know the way home. You don't need somebody to hold your hands and take you across something. You just need some guidance. That's the way to go. Figure your path out, and you'll figure it out. And there will be people who will help you along the way without knowing that they've helped you. Some
Yeah.
people will genuinely want to help you. Some people will not.
Hmm.
But in the course of even an argument or a debate, I have learned so much. And for instance, even with fellow fund managers, people, some of whom are very famous personalities on Twitter and on in the PMS and fund management world, I have learned so much from just conversations. It's
Yeah.
just amazing, and I look up to them because I respect their knowledge, I respect their thing, but they are not. They don't even know that I respect them for
Yeah.
something that they have said, which kind of triggered a thought process, which kind of built a little bit more of me. But I
Yeah.
think overall, one has to imbibe everything, respect experience, understand the most important thing is that there is no one way that to be successful. There are many ways to be successful, and you choose yours. Uh, and it's not necessarily that you're right and someone else is wrong, or that
Hmm.
someone else is better than you. It doesn't matter. In the end, the rat race is just a rat race, and you have to be comfortable with what you are. That's all.
Absolutely, absolutely. I get it. I mean, at the end of the day, we are what we, I mean, we borrow bits and pieces from many people and sort of become something of our own, right? I mean, and it's really difficult to, straight away copy paste someone else's approach because I believe you can take someone's strategy, but not so much their conviction on that strategy. So ultimately, for you to do something with conviction, you got to build something of your own. So I believe, I guess what you're saying, yeah, I 120% agree with you.
Absolutely, absolutely.
So, Deepak, one question: were you first a trader who then became an investor, or were you essentially an investor who also trades?
So I started off investing
Hmm.
fundamentals, and then figured out that there's more fun in trading and learning some quantitative techniques.
Hmm.
Technical were interesting also because engineering background, so you don't place so much weight on opinion as you do on facts.
Hmm.
So data is more valuable than opinion. So you can tell me that a company has made so much profit or so much this thing, but that doesn't provide me any context. I'll have to look at its comparatives and form an opinion of that data by myself. Whereas traded price data
Hmm.
is true to a certain
Hmm.
extent. So the technical analysis part of it is far more driven by data and in a certain way the behavior behind the data. So a lot of the study that I did towards the fundamentals would actually fall flat. You won't believe it. The first stock I picked up, I think, a second stock I picked up was Syntex.
Okay. Hmm.
And I mean, a bunch of other stocks that I thought were very good balance sheets at the time. They did
Hmm.
make a lot of money
Hmm.
for what is a 1 or 2 year investment. I think I got more than double my money in the first few days of first few years of the investments.
Hmm.
And many of these were fundamental driven, but then I realized that there's more happening here because there were many opportunities in stocks where the fundamentals would follow the prices. The prices would start moving in one way, and then the fundamentals would kind of come later. And
Hmm. Hmm.
to that extent, I try to respect that prices matter. And
Hmm.
sometimes it's useful to even build a strategy that's entirely based on prices. That my first realizations were then. So I moved to trading Then we did a lot of work around quantitative stuff. Spent a year building quantitative algorithms that would automatically trade the markets, but you couldn't place the orders automatically at that time. There were no APIs. So we
Hmm.
would actually write a program that would give us orders, and then we would use those orders and punch them into our share Khan terminals. So
Hmm.
that was me and my partner at the time, and we built a company called Money Yoga. That was
Okay.
trading outright, and we were trading through 2008. By October, we had
Hmm.
made 20% on our money
Oh,
by
wow.
trading only intraday, and this was because the system was out at the end of the day.
Hmm. Hmm.
It was
Hmm.
flat, so it was an intraday system. So
Right.
every day, morning to evening, it would trade stocks,
Okay.
and by 3 o'clock, we were done.
Hmm.
So it was very interesting because we couldn't even tell the world about our success because everybody was losing money, right? So it's
Yeah.
not
Yeah.
even nice to tell people कि यार मैंने 20% बनाया, where they're looking at you and saying, how you guys are shorting, you're unpatriotic, all sorts of shit will happen. So the problem with this whole approach was that people, and you had to convince a lot of people overall because we didn't have that much money that we could
Hmm.
make enough of our own money to kind of survive. So
Hmm.
we would have had to raise money. And in this environment, people become very mistrustworthy of people who say they make a profit. So
Hmm.
although we gave our account statements to one company, they actually they saw the account statements, they actually did an audit on it, they found that it was correct.
Hmm. Hmm.
They unfortunately, in the process of this whole thing, they only went bankrupt. Otherwise, they were looking to purchase us. But
Okay.
um, they the interesting thing about that exercise, what I realized, that the markets are also a victim of the narrative.
Hmm.
So over time, it doesn't matter how successful you are as a fund manager. The
Hmm.
narrative is more important. This
Hmm.
is why even a certain mutual fund which has not performed for 10 years
Hmm.
continues to be one of the top
Yeah.
AUM mutual funds in the country. That's
Yeah.
because the narrative is more important. We have this four-digit acronym or what four-letter acronym. So
Yeah.
it's the brand and the human presence that sometimes matter more in a fund gathering or AUM gathering approach
Yeah.
than it is the actual performance itself. It's not a very nice thing to realize because it effectively says the first ranker will not always get the best job. But it's
Yeah.
true in life also that the first ranker does not get the best job. It's often person's communication skills and other skills that kind of come into handy in those kind of situations. And you'll find that the people who have even become CEOs of very large corporations weren't actually toppers in their college days either. So a
Hmm.
lot of the skills required to do certain things are not necessarily academic,
Hmm.
or in the case of AUM performance. So to that extent, leaving that aside, of course, the idea of understanding markets was also about understanding how the narrative works, which
Hmm.
means you had to have some kind of an idea of how the narrative was moving. So if a loss making company is making new highs, you don't necessarily write it off. If
Yeah.
and right now you can there's a telecom company which has been dead for the longest time, suddenly it's making new highs every day. So the old timers will say that's a fraud company, kuch nahi hai, sirf bada naam hai, but there's nothing in that. But
Yeah.
the newer people are looking at just the prices saying, what difference does it make? So it's that philosophy that kind of has, shaped the rest of my life, which is whether it's trading or investing has no meaning to me anymore. You want to make money, and whether it's the difference between trading and investing, according to me, is two things. You take leverage in trading and you go short in trading.
Hmm. Hmm.
Otherwise, investing and trading are the same thing to me.
Yeah. Yeah. And maybe,
So
as I said, your time frame could be slightly longer in investing, possibly.
um, you can trade long term, you can invest short term. I think that's both valid. There's no concept that this is something different from trading versus investing.
Hmm.
But my philosophy on this is that only leverage loss or something like
uh,
that, and
uh,
still the stock was making new highs at that time. So
yeah, yeah,
it happens,
yeah.
and sometimes you don't need to question why it happens.
Yeah, 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 and in fact, I had someone, someone great. I don't remember his exact name, but I remember his quote that you don't have to understand what markets are doing to make money in the markets, right? So, yeah, I mean, I think those who follow where the market leads us, at the end of the day, those are probably more profitable because they are very amenable to change. They are very open to go wherever the market leads them. I think that's one quality I believe, which sort of. So that
Yeah.
sorry, you're
So,
saying something.
good, 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 good. Okay. Correct.
So
You're right.
that brings yeah, yeah. So that sort of brings me, to my second related question, Deepak, that, within the investing, like, within you as an investor, are what is your personality more, more gelling with? Does it gel more with value investing or with, say, momentum investing? What are you at heart?
I'm not a very good value investor, to be honest. I don't understand the concept very well, and I think all labels are fraud. In the
Hmm.
sense, value, calling oneself a value investor or calling oneself a momentum investor, largely fraudulent. From a perspective that there will be momentum in value stocks, there will be value in momentum stocks, and
Hmm.
sometimes you could mix the two,
Hmm.
and often labels are a waste of time. You
Hmm.
do what makes you happy. If momentum does, then it doesn't mean you're a momentum investor. It just means that at the moment, momentum is working for you.
Yeah. Yeah.
Uh, so it is like you could have a new religion every day, and that's fine with me.
Yeah. Yeah.
I'm perfectly fine with that. Even in real life, if you want to have a new religion every day, please go ahead. I mean, I have no problem with that at all. But
Hmm.
my philosophy in general is you should not have religions in markets that are sacrosanct. You shouldn't be like, अरे मैं value investor हूँ ये stock नहीं लूंगा ये क्या मतलब इसको जो
Hmm.
बनता है बनाओ उसको क्या मतलब इसको जस्टिफाई करोगे मैं ऐसा पर्सनालिटी आई मीन यू कैन से ओके दिस आई एम नॉट दैट काइंड ऑफ पर्सनालिटी who will
Right.
buy such a so for instance and maybe I am not I have realized that certain value or contrarian kind of positions don't work for me
Hmm. Hmm.
at all. So,
Hmm.
for instance, you may tell me ITC is a value stock, ITC is this, ITC is that, but I just haven't found myself finding the enthusiasm to buy it. But if
Hmm.
I
Hmm.
were to buy it, does that make me
Hmm.
a value investor? I don't
Hmm.
know. I don't care because the label does not matter to me. That at the time I will buy something, I would have found that it has risk reward is higher
Hmm.
for the buying of it. Not
Hmm.
necessarily that the stock is good, that the stock has
Hmm.
great management, that nothing of the sort. It doesn't matter to me that the stock does not have. I mean, if the stock has bad management, I will be a little more careful. But it doesn't mean that
Hmm.
the stock is never a buy.
Hmm. Hmm.
Every stock is a buy at some level,
Yeah.
regardless of how bad it is. And of course, some stocks are no buys at no levels at all. You should know that. The experience teaches you that. But the idea is always a risk reward, and you don't have to win every battle. You will not
Yeah.
win every battle. So some battles you will win, some battles you'll lose.
Yeah. Yeah. No, as I say, whatever floats your boat. At the end of the day, we are all here in the market to make money, right? So, as you rightly said, who cares whether you're a value investor or a momentum? At the end of the day, what matters is, are you making money? At the end of the day,
Well,
you know.
to be fair, a lot of people don't come to the market to make money. Most people that talk about making money in the markets come to brag about it.
Hmm. Hmm.
Which means that the people who are most vocal sometimes
Hmm.
about uh, strategies or something like that, or what they have made. So you'll find one person putting, Acha, I said this stock at, I told you about this stock at 30 rupees, now it's at 60 rupees.
Hmm.
उसमें उसने कितना पैसा बनाया? He might have put only 1,000 rupees into it.
Yes. Yes.
And he's feeling very good about it. Whereas somebody else who has made only 5%, but he has put 5 lakh rupees on it, he has made
Yeah.
more money in absolute terms.
Yeah. Yeah.
People may have had the money. One guy just put 1,000 rupees on a bet, and one guy put 5 lakh rupees on a bet, and it was different. But nobody talks about that. So many people come to brag in the markets.
Yeah.
So that's okay. Whatever
Yeah.
floats your boat.
Yeah, yeah, absolutely. So tell me one thing, Deepak. You started your entrepreneurial journey. You have been now, you've started Capital Mind, and it's flourishing and doing very well. So tell me one thing, as an entrepreneur, do you believe that since trading is also nothing but running a business, right? And whoever thinks otherwise pays a lot for that mistake. So given the trading or investing for that matter is at the end of the day just another kind of a business, do you believe that someone like you who has an active business as an active entrepreneur with a big team, office, everything, does that sort of prepare you better to look at trading and investing as a business, and does that sort of make you a better trader? And when I say you, I mean not you personally, but basically any trader, any entrepreneur or a businessman, does he have a better mindset skills to succeed in this field, you believe?
Um, I don't know what better, because in my view, so this is world famous. Uh, there's a movie called Trading Places, and everybody should watch that.
Hmm,
But
hmm,
it talks about precisely this, saying I mean, well, it's not exactly this, but the idea is whether trading is an innate uh, concept, or can it be learned and
hmm,
made
hmm,
better over time by the right kind
hmm,
of people.
hmm,
So if it is, of course, if it's an art, that
hmm,
means some people are born with it, some people are not born with it. It's like
hmm,
a artist. So I cannot draw for my life, but there are people who can draw much better without any training than I
hmm,
could with even years of training.
hmm,
So and then there's something called skill. So over time, you can get better on something which has skill level. So whether it is an airplane pilot or a doctor, the more years of experience you have, the likely better you're getting at it.
hmm,
It's
hmm.
not an art, it's a skill. You can learn it. So,
Yeah.
whether trading is an art or a skill, and that's why running it as a business would make a difference. If it was a skill, then uh, you could, the right person putting the right amount of effort and time behind it would be a phenomenal trader. If it was
Hmm,
an art, then random people would be phenomenal traders. Now,
hmm,
what I feel is the real answer is somewhere in the middle, is that
hmm,
most investing is about behavior. So,
hmm,
the kind of characteristic traits you need to be a great investor are often not taught and are learned by going through failures, disasters, complicated issue times, and so on like that. So, last 1 year, if anybody has been an investor or trader, their skills are non-existent, in
hmm,
my view, because
hmm.
the last 1.5 years wouldn't have been tested at all.
Yeah.
It is the test in the truly crushing times is
Hmm.
when you realize what you are and how good you are as an investor or trader or whatever it is. And
Yeah.
that you know fortunately or unfortunately has to be determined over a period of bad times, and it's the
Yeah.
bad times that make a person what he is. So necessarily speaking, I think businesses that survive over very long periods of time, even in the
Hmm.
trading world, are
Hmm.
typically someone who has some interestingly good standards if they are putting their own money where their mouth is. That
Hmm.
means they are the ones who are trading it. Now, there are lots of firms that exist who trade other people's money sometimes for the
Hmm.
most part,
Hmm.
and they may not necessarily be the best traders, but they have a lot of money power simply because they've stayed on in the game so long,
Hmm.
and they have the ability to get new information fast, or process that information much better, or have more avenues to invest in, and so on. These are features of experience, features of a business. Whereas you, as an individual, may not have all those avenues, may not be able to get those information in time, and so on. This
Hmm.
just makes you more information rich, not
Hmm.
necessarily a better trader or investor. So
Hmm.
I think if you're good at it, you should invest time and money in it and make it a
Hmm.
business.
Hmm.
If you discover you're not very good at it, especially in times when the behavior and the what I call the gut level, your
Hmm.
ability to handle deep drawdowns is at
Yeah.
question, then you're better off not doing it as a business.
Yeah. Yeah. As they say, so people often confuse brains with bull market, right? So I think, as you rightly said. I mean, see, last 1.5, 2 years have been something where all you had to do to make money was buy a stock. That's all. Okay, that was all the research you needed. I mean, for a large part. I mean, generalizing the point, but the real test of someone's investing or trading ability would come when the markets would be sideways, choppy, or the way it has been for the past few months or a couple of months. So I guess people, real investor, the men will be separated from the boys, as I say, in the days to come. So yeah, I take that point. Going to my next question, Deepak. One thing I wanted to ask you, that do you believe investing or trading in India is a different ball game as compared to trading or investing in the developed markets? I mean, leave aside the obvious point that we are a developing economy versus those are developed, but that otherwise, is the nature of the Indian market different than the developed markets? Do you think there are some things which probably work in India which don't work there, or they work there but don't work here? I mean, any, and again, just a general question in case you have any insights on this point.
So there are definitely certain things that work in India that don't work abroad. For instance, in India, there's something called bonus stripping. Bonus stripping
Hmm.
is a tax saving mechanism that is specific to India. You
Hmm.
can do bonus stripping in India. No other country kind of has a similar law, as far as I know, which
Hmm.
allows you to book losses without actually having losses. Now, our income tax department supports it. Therefore, you find that stocks which give bonuses get a little bit of extra interest because of this bonus stripping opportunity that is created. This is very specific to India. You can call it investing or trading, however it is, but it's a way to generate a loss without actually generating a loss. It can
Hmm.
offset certain other profits that you may have already generated.
Hmm. Hmm.
So that is one. There are other things that are very specific to India. For
Hmm.
instance, we have some of the largest single stock futures market in the world.
Hmm.
So the ability for individuals to trade single stock futures is very high in India compared to most of the rest of the world. So the developed world, typically nobody trades single stocks futures. The market isn't developed at all. So that trading and the concepts around it are very specific to India. So there are different instruments. There's also different rules. So America has a rule that says if you do more than 4 intraday trades a week, you're considered a
Hmm.
pattern day trader. And
Hmm. Hmm.
PDT rules require you to have a balance of $25,000.
Hmm.
And you may have to pass a test and all that stuff.
Hmm. Hmm.
Retail investors cannot easily write options. They have to pass some kind of test that the broker has to give them, in the sense net worth and something, and that only then can they write options. Here, everybody can write options.
Hmm.
So the
Hmm.
rules are different for America and for India in terms of trading, the ability to take that leverage.
Hmm. Hmm.
Uh,
Hmm.
there is also a difference in the market size and depth. America has a very, very deep market. India's
Hmm.
market is technically, for the most part, very shallow, especially
Hmm.
when it comes to large sizes. So if you want to even trade 10 crores or 15 crores in a day, which is a very tiny amount for a hedge fund or a larger fund, you will actually end up with a very limited number of stocks, maybe maximum 100 stocks that you could use as a universe to trade in.
Hmm. Hmm.
So you um, you have much lower liquidity here. So you have to be more careful of trading larger quantities using market orders and so on. We also don't have. I mean, there are lots of smaller things that are different here. You have demat accounts which are separate
Hmm.
from the broker.
Hmm.
So
Hmm.
which can be separate from the broker. So which means that your shares are safe even if the brokers go down. In America, it's a little more complicated. Your shares are safe. There's an
Hmm.
insurance component, but
Hmm.
the shares are typically held in the broker's name, not in yours.
Hmm.
So this complicates matters because so even when a lot of Indian investors use some of these newfangled websites to invest in the US,
Hmm.
they don't actually hold the shares. The shares
Hmm.
are held in the broker's name.
Hmm.
It's called street name. So you don't reflect on the company's shareholding pattern.
Hmm.
The broker does, but the broker kind of intermediates for you.
Hmm.
So
Hmm.
there's there's that differential also.
Hmm.
But typically, most of the rest, the concept, the people, the greed, the fear, all of them are the same. Uh,
Hmm. Hmm.
there's
Hmm.
no difference between an American retail investor panicking and an Indian investor panicking. It's
Yeah.
roughly the same things that drive the market, the same behaviors.
Right. But maybe one aspect which I probably think of is that do you think maybe the pace of growth of stocks in India, being a developing economy, is probably more than a developed economy like US. Is that, would that be a maybe okay statement to say, or you don't think so?
So, if you map Tesla's growth, and Tesla's, I think, the world's largest market cap company at the moment, or has been,
Hmm.
uh, for the last 3 years, I can almost guarantee that there is no Indian company that
Hmm.
is in the top 50 today
Hmm.
that has close to the same growth.
Hmm. Hmm.
In fact, in all probability, India, a Tesla-like company wouldn't grow at all
Hmm.
because it is a loss-making, क्या है नया टेक्नोलॉजी किसने देखा ही नहीं है टाइप थिंग.
Hmm. 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 Right.
Similarly, are the kind of stocks we have that grow like crazy, or that are in the top 50 stocks. There's a coal company. There's
Hmm.
a aluminium company. There is
Hmm.
there are two or three steel companies. What is the point of a steel company? वो स्टील
Hmm.
बनाता है. उसमें क्या है टेक्नोलॉजी कुछ नहीं है वो यू टेक सम आयरन और डू सम ड्रामा टू इट इट बिकम स्टील सो
Hmm.
देयर इज नो टेक्नोलॉजी देयर इज नो एलिमेंट ऑफ growth or some infinite growth that you can build like a
Hmm.
Google has
Yeah.
मुझे
Yeah.
सब लोग आएगा इधर मेरे में सर्च करेगा मेरे से ढूंढेगा सब मेरे पास ही आता है तो आई हैव द एबिलिटी टू पुश मोर प्रोडक्ट्स एंड आई have now the world's best map product, the world's best this thing product. People are with me all the time. You
Hmm.
can't say that to other than maybe Reliance Geo.
Hmm.
And
Hmm.
even there, I use the data. I don't actually use their applications, perhaps,
Yeah.
as much. But that becomes a point of this thing that what are we talking about in terms of growth? I don't think India has anywhere close to the impossibly crazy growth that US tech companies have seen in the last 15 years.
Hmm. Hmm.
Whether it was Apple, whether it was Google, and Apple's been listed for what, 30 years.
Hmm.
And suddenly it's just moved from where it was 20 years ago. It was so close to bankruptcy, it needed a loan from Microsoft to survive.
Yeah.
Uh, Not loan, but Microsoft took 10% of Apple. And today,
Hmm.
Apple's one of the largest market cap companies in the world. And, such things happen in,
Hmm.
uh, uh, in America very easily.
Hmm.
Whereas in India, you don't find that insane change of leadership yet. It'll happen for sure.
Yeah.
Some of the
Yeah.
new tech companies will come and take over the Nifty at some point in time. But I don't think it's fair to say that India is a developing country, so it will grow faster. There is
Hmm.
no evidence that Indian stocks grow in any meaningful way faster. In fact, if you look at just the NASDAQ 100,
Hmm.
the last 10 years, the NASDAQ 100 in the last 10 years has beaten the Nifty in rupee terms.
Hmm. Hmm.
So if you had invested in the NASDAQ 100 sitting in India, you would have
Hmm.
made more,
Hmm.
substantially more than Nifty has in the last
Hmm.
10 years. Uh, um, Not, of course, accounting for, of course, about 20% depreciation also over the last 10 years. But even
Hmm.
then, it's a significantly higher, uh, uh, difference that you've seen in the total performance of the Nasdaq 100 versus the Nifty. So I don't think that statement seems to be backed by data. It
Hmm.
sounds good from a अपन डेवलपिंग है तो अपन तो मतलब अच्छा अच्छा ही
Yeah.
करेगा टाइप थिंग.
Right. Right.
ये मदरहुड स्टेटमेंट्स हैं मतलब डेटा में अगर आप डेटा देखो तो नहीं आता है.
Right. Right. No, of course, you have far better insight on these points than me. But a general layman's perspective is that the way a small cap stock grows faster than a large cap. So, from similar taking the similar analogy, India being a relatively, say, smaller cap company, or so smaller cap country as compared to, say, US. I mean, the general perception is that we should be ideally growing faster, and therefore our companies, or our stocks, or at least our small cap micro caps should offer. So that was my perspective. But as you said, ultimately, data is what tells the real story. So, Deepak, I am tempted to ask you this. There are so many these new age IPOs coming in, Nykaa, Zomatos, and Paytms of the world. What's your, without going into specific name, but generally as I first of all, are you someone who likes to invest in an IPO at the IPO stage, or that's question? That's a larger question. And then within that, particularly for these companies, these so-called internet age companies, the technology e-commerce companies, what's your take with all these lofty valuations? Just any insights, thoughts on this point?
So basically, I we don't buy IPOs per se because IPOs may, like Samir Arora says, uh, आपको if you want it, you won't get it,
Hmm.
and if you get it, you don't want it. So that's the problem with IPOs is that when there is very high demand for an IPO, usually it's either insanely priced or you're not going to get any allocation, and if it's correctly priced, you don't want it in the first place. You don't like the company at hand. So that's one thing. But tech is changing the world. It's eating the world faster than you can imagine. It's
Hmm.
changed investing and broking. There
Hmm.
could be no chance 10 years ago that you could have told someone that a broker from Bangalore, largely online, without presence in all major uh, states, also can
Hmm.
become the largest broker in India.
Hmm.
Today, three of the top five brokers
Hmm.
are tech first, and
Hmm.
two of them are in Bangalore.
Hmm. Hmm.
So, or headquartered in Bangalore. It's actually quite amazing that that's happening, but it's happened, and tech has eaten the uh, this thing world. Tech now is eating the mutual fund world faster than they can imagine. Somebody
Hmm.
yesterday I talked to said, if we have because we have applied to be a mutual fund." Somebody connected with us and said, if you're not doing things physically, then we can help. I said, what do you mean physically? I said, नहीं नहीं वो फॉर्म भर के जो म्यूचुअल फंड में इन्वेस्ट करता है. I said, ये सब
Hmm.
कौन करता है? So then I genuinely realized that I am those are the dinosaurs of the investing world. There's still a fairly large chunk of the investing world
Yeah.
in mutual funds, but now 90% of the people that I know doesn't use forms to invest in mutual funds.
Yeah.
Everybody
Yeah.
uses online platforms. So,
Yeah.
and those um, online mechanisms have taken over because it allows you to invest anytime. There's no need of physical going to some place, signing something, sign mismatch, all that shit. To the extent that a lot of our customers don't have checkbooks. So when we ask
Hmm.
them for, yeah, we want a verification of your bank statement using a checkbook, they say, what is a checkbook?
Hmm.
We are like,
Hmm.
okay, we have to do something. So we are now doing something called penny drop. So
Hmm.
because tech is eating the world,
Hmm.
and I am seeing it live in the brokerage mutual fund kind of industry,
Hmm.
why wouldn't it happen everywhere else? Why should
Yeah.
banking not have, for instance, today if you want to close an account, you have to go to the bank. Why? I don't know.
Yeah.
But you have to go
Yeah.
personally. Go
Yeah.
twice. I found out very recently I had to kick up a fuss on Twitter to
Hmm.
get a bank to close an account.
Hmm. Hmm. Hmm.
You can't just close the account. Okay.
Yeah.
And you can't, if you want to close a housing loan, you have to go in
Hmm.
person every day, but the last 5 days of the month, they don't entertain.
Hmm.
Why?
Hmm.
This is bullshit. So
Yeah.
this bullshit has happened because these older, bigger companies thought that yeah, we can say what we want. What will the customer do? The
Hmm.
new age
Hmm.
companies are coming and saying, no, customer wants this. We will do it.
Exactly.
Close accounts online, open accounts online, add funds online, never visit a branch, and you'll still be okay. This
Hmm.
is new India.
Hmm.
And people
Hmm.
don't want minimum balances. People want ki yaar jab bhi whenever I want, I should be able to do something for very low cost. This
Hmm. Hmm.
is going to change banking. This is going to change. Uh, it's already changed shopping in a very major way. Online shopping and trends and all that stuff. Discovery, distribution. Because of that, I think they will be the biggest companies in India in the next
Hmm.
10 years, guaranteed.
Hmm.
The
Hmm.
only company that seems to have recognized that among एक बार बताओ, just take the Nifty 50, take all
Hmm.
the companies,
Hmm.
okay, go to their
Hmm.
websites and
Hmm.
see if you can do a transaction to buy their products on their own website.
Hmm. Hmm.
Go to Hindustan Unilever's website. Can you buy a shampoo there?
Yeah.
They sell shampoos,
Yeah.
but you can't buy it from the website.
Yeah.
You can go to maybe one of these car manufacturers as recently as like 1 year ago. They've
Hmm.
introduced you can book a car online,
Yeah. Yeah.
which is now after so many years. Okay. And
Yeah.
then you go to the banking websites. Of course, banking sometimes they allow you to open a bank account online. It's only started now.
Yeah. Yeah.
Whereas if you go to any of these new tech companies, you
Hmm.
can go to their website and start transacting.
Yeah. Yeah.
So it is, these are different companies. So I think they will be the future, and whether
Hmm.
we like them or not,
Hmm.
some of them will be loss making now. They will change to profit making at some point in the future,
Hmm.
and that will be the scale of the game.
Yeah.
So whether you whether it's a Nika or a Paytm or a Policy Bazaar, I don't know. But
Hmm.
the point about this is that some of these companies will win and win big. So
Yeah.
it's not useful to say, कि देखो, I don't like these companies, they're loss making. You have to analyze about the kind of impact they're making on people's lives and their amazing amount of leverage that they can
Hmm.
change the whole world,
Yeah.
or the whole of India,
Hmm.
because of the operating leverage that they have. When I say operating leverage, it means you do a small thing, it becomes a big thing in
Yeah.
terms of revenues and profits.
Yeah.
That ability is there with the new tech companies. It's not there with some of the older guys. So you
Hmm.
should see the aluminiums and the coals go away from the index
Hmm.
and get replaced by the newer players who
Yeah.
are seeing rich valuations today. But when is a valuation not rich? Amazon
Hmm.
has always been rich valuation.
Hmm. 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 So Deepak, maybe changing the gears a little bit. You have been now managing other people's money, right? I mean, you as in you and Capital Mind. So whether it is through PMS or through small case, or things like that. So the question is, do you what are what are the psychological aspects about managing other people's money? When you manage other people's money, is it more about managing the clients themselves, or because that is a term that I often hear, that it's less of managing money, it's less of managing the client. So do you agree with that? And how's been your experience? What are the challenges, if at all, you have faced in managing other people's money, dealing with clients, or managing their expectations?
So everything in the world is about managing expectations, whether we like it or not. All you're doing is managing expectations to a large extent. Um, Many times, expectations are, as in the normal world,
Hmm.
not stated outright. So
Hmm.
लोग कहते हैं कि आई एम लॉन्ग टर्म, बट एक्चुअली उनके माइंड में होता है कि हर महीने मेरे को 2% चाहिए.
Right.
So when you're getting it, you're fine. When you're not getting it, you're suddenly short term. ये क्या है? तो मैंने expect नहीं किया था कि loss भी होगा. But वो
Hmm.
ठीक है. That is the way the world is.
Hmm. Hmm.
Uh, so that is part of your job. Most investing, whether it is management or not, is about behavior.
Hmm.
All investing is about behavior.
Hmm.
What
Hmm.
most. Markets go up because of behavior, markets go down because of behavior. Not because fundamentals are great. उससे कुछ नहीं
Hmm.
होता है. Mostly
Hmm.
it's the behavior of investors that makes the investment big
Hmm. Hmm.
or small. I mean,
Hmm.
however, uh, it happens. So sometimes stocks are overvalued because investors are very, very bullish,
Hmm. Hmm.
and sometimes investors are bearish. So it doesn't matter how good the performance, stock ऊपर नहीं जाता है.
Hmm.
So given that investing is also behavioral, customers will also be behavior driven.
Hmm.
So everybody whose money you manage, you have a
Hmm.
responsibility of understanding what their behavior is,
Hmm.
and therefore shaping your advice or your thought process to their behavior. Which means
Yeah.
don't give a person your services if they are the kind of person who will not be able to deal with the uh, drawdowns or the volatility of the products you sell.
Hmm. Hmm.
ये नहीं है कि, don't sell, like I tell banks, don't sell a 70-year-old person an insurance policy. That's just plain selling. But
Hmm. Hmm.
beyond that, should you sell a 50-year-old person? Then it becomes an art, right? So कि देखना
Yeah.
पड़ता है कि उसकी जरूरत है कि नहीं है.
Right, right,
So if a person does not have the uh, wherewithal to take the kind of volatility that your product may have, then why are you selling him a high volatility product? Sell him
hmm.
something that's relatively low on volatility.
Yeah,
Or
yeah,
tell him 100 times. Now we've started a new policy of saying someone who's more than 60, 65 years old, we
hmm,
want a double confirmation that they are
hmm,
truly aware
hmm, hmm,
of the kind of volatility this product can see
hmm, hmm,
before they invest. No, because last few months, what's happened is there's been an increase in interest in the stock market to a little bit of a crazy amount of extent.
hmm.
So we're talking to people who have no other income sources and seeing whether are they just using this as a means to say कि यार मेरे को fixed deposit से तो कुछ नहीं मिल रहा है stock market से कुछ मिल जाएगा.
Huh, huh, huh.
So then they cannot handle the downside. They can't see their money down 20%.
Yeah, yeah.
So
And
you have to be a little more careful.
huh. No, I agree, agree. In fact, there is a general misconception that debt is safe. I mean, and Franklin Templeton, the saga has proved otherwise, and there are many such instances. But I think people have to realize that money, in no matter what shape and size, is not risk free. The risk degree can vary, but nothing is sort of risk free in this world, right?
Absolutely, absolutely. I
Yeah,
think risk is a problem we don't understand. आपको
yeah,
लगता है कि रिस्क ज्यादा लेगा तो रिवॉर्ड ज्यादा मिलेगा ऐसा कुछ नहीं
right,
होता है
right, right,
रिस्क ज्यादा लेता है तो रिस्क ज्यादा लेता है बस
right, right.
रिवॉर्ड मिलता है तो मिलता है नहीं मिलता है तो नहीं मिलता है sometimes you
Yeah,
can get high reward on low risk also.
yeah. So I'll go on to my last two questions, and second last question, Deepak, is I have read your book, and it was I was actually on a I was on a I had a day long visit to Delhi, and on my journey to Delhi and back to Bangalore, I finished the book. It was really good. I think you have sort of tried to explain the various aspects of financial literacy in that book. But for those who haven't read it, maybe do you want to just take a couple of minutes to tell what that book is about and what really sort of was your inspiration? What thought? What made you think of writing that book and what that book is all about?
So quick note about the book, and if you're in Bangalore, I'll be in person tomorrow at uh, the Bangalore International Center, also
Hmm.
talking about the book. But a quick note about the book here is that the book is meant for a beginner investor, an early stage investor who's trying to evaluate the various options that they should look at before they start investing, or whether to invest in the first place or not. So it's more
Hmm.
for a early person who may not necessarily be very deeply financially oriented. In fact, for the
Hmm.
more financially oriented, it will be boring because it's repetitive.
Yeah.
But one of the things that I do say in the book is it's a journey, and you don't have to be um, the best investor in order to make the greatest of returns. You don't have to, in fact, make the greatest of returns at all if you want to meet your long term financial goals. It may make a lot of sense to choose who you are. Of course, the alternative of debt as well, where for peace of mind, you want to just keep some money in something that's a simple debt kind of even a fixed deposit or a government bond is good enough to give you that
Hmm.
peace of mind that the money is safe
Yeah.
over the longer period, over the longer term. And of course, the idea here is that the beginner investor gets a framework to work with.
Hmm.
And the last chapter is, of course, about scams. So, because you will be in the investing world, you'll hear of a lot of people tell you, "Ye insurance kharido, wo kharido, we kharido." There are ways to look at these things because some of them are just scams.
Yeah. Yeah. Yeah.
And for the most part, a lot of the things in the crypto world are just scams.
Yeah. Yeah.
It's beautiful for it because there's no regulation. So
Hmm.
people scam each other all the time. So that's a big scam world. There is a
Hmm.
bunch of um, stories that I've put. Some of them are bigger scams, like say the NSCL scam,
Hmm.
where
Hmm.
people were promised 18% a year. So 18% तो
Hmm.
बहुत अच्छा लगता है 18% a year बहुत risk free मिल रहा है यार no problem ये तो exchange है. Then you find
Yes.
out that the whole exchange was a Ponzi scheme,
Yeah. Yeah. Yeah.
which
Yeah.
killed 5,000 crores plus of investor money. So the idea is to introduce people to such scams so that when they hear similar scam nature of claims, that they will be a little more questioning
Yeah.
and not therefore get trapped in the same scam. You may get trapped into new scams because obviously I've not covered all the scams in the world, but
Hmm.
covering the scams that I did at least will help build a framework of कि ये तो नहीं ये तो यार at least shady लग रहा है. So
Yeah.
that is the book. The book is it's a easy breezy read. It's
Hmm.
not really very complicated. Try to make as little jargon as possible, but it
Hmm.
may not necessarily help the trader because
Yeah.
I don't talk about deep technical strategies to go in and all. Small references are there, but
Yeah. Yeah.
I don't go deep into those. But it's more towards understanding who you are and what kind of framework you should use to invest.
Yeah. 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 Absolutely. So, Deepak, before we go on to the audience round, I have just one last question, which is more of a question to you as to what are the maybe two or three points you would like to advise upcoming or struggling investors, traders out there, to keep in mind as a market participant. What are some of the things you would like to advise them?
Okay, very tough question because पहले तो you should first advice is never take advice which is free, which is usually the most costly form of advice.
Hmm.
So whatever I'm saying, please take with appropriate pinches of salt. Uh,
Right.
uh, so one of the things that I will say, and none of this is like actionable advice कि कल जाके ये खरीदो सब कुछ ठीक हो जाएगा, ऐसा
Hmm.
कुछ कोई नहीं बोलता है. कोई ऐसा बोलता है तो
Hmm.
उसकी बात मत सुनो. यही एडवाइस मैं दूंगा, which is
Hmm.
if somebody tells you definitive advice, ये
Hmm.
लो ये ऊपर जाएगा ये लो ये नीचे जाएगा, that
Hmm.
is usually a trader's nightmare because they learn the hard way.
Yeah.
I'll
Yeah.
tell you a story. There's a person in the UK. He found about say 5,000 addresses, and this is a story. It's fiction, but may have actually happened. I don't know. But he takes 5,000 addresses, and her 2,500 he sends a message saying आज ये स्टॉक ऊपर जाएगा.
Hmm.
Next 2,500 he says आज ये स्टॉक नीचे जाएगा.
Hmm. Hmm.
So
Hmm.
obviously now stock goes up. Then he sends the winning 2,500, whoever had got the upar jayega, another, he divides them into two and sends another 1,250 people a message saying this stock will go up tomorrow, this stock will go down. Based on whoever wins, after 10 days, the person who has got the message for 10 days consecutively means he was just part of the lucky few who kind of survived.
Yes.
Now there are some 125 people left after 10 days.
Yes.
Then he says, यार 10 दिन मेरा सही था.
Hmm.
अब आप ना, you have to pay me 1 lakh rupees for this service. We have an algorithm that predicts the markets and it is fantastic and you have seen how it works.
Yeah.
125 people, may say 50, 60 people feel super impressed. They are so happy. They pay 1 lakh rupees each, 60 lakhs.
Hmm.
Then he sends random messages, ऊपर जाएगा, नीचे जाएगा, nothing works. But they've all lost
Yes.
their money. They
Yes.
feel stupid कि यार ये तो, they feel cheated. But what to do? He's got his 60 lakhs and he's made off his money. The nature of this is nobody knows.
Hmm.
Question everything. So this definitive shit doesn't work. Everything has probabilities, and you have to know what to do if things don't work.
Yeah. Yeah.
So whether you call it a stop loss or whether you call it diversification using multiple instruments, you take bets on a lot of things so that not all of them will go in the same direction at the same time. And even if they do, that you have a plan to solve it. That is more um, a concept of life that you should follow as a trader rather than listening to one person say ये पक्का right है ये जो बोला है तो जाएगा ऊपर या
Yes.
जाएगा नीचे. So
Yeah.
that kind of thing I would say is one thing.
Hmm.
The other, so what would I say? Another piece of advice I would generally say is that don't get fixated on one thing. There is no one way to make money. There are hundreds. If something doesn't work for you, it doesn't mean that you're wrong. It may just mean that you don't have the temperament for it. So
Hmm.
I figured out that intraday trading, I did it for a year, more than a year.
Hmm.
I did it every day.
Hmm.
And I made money. And I made serious money out of it. But
Hmm.
I discovered it's not for me.
Hmm.
leaves me
Hmm.
so tired at 3 o'clock. I can't even think. I can't
Yeah.
talk to my family. I can't. I become a recluse. My
Yeah.
mind just goes flat. I don't want to talk to people. It's just overpowering.
Hmm.
The
Hmm.
weekends start to become a relief because you
Hmm.
don't have to trade.
Hmm.
That kind of shit is not for me. So
Hmm.
you discover who you are, what kind of stuff works for you, what your temperament is. That is the most important thing.
Hmm.
Um, Once you discover who you are, then you may make less money, but you'll be happier.
Hmm.
And in general, in life, you should optimize for happiness, not money.
Yeah. Yeah.
The happier you are, even with a relatively less amount of money,
Hmm.
it's fine. You'll
Yeah.
actually come out a better person,
Yeah.
uh, and you will value your life because if you
Yeah.
optimize for unhappiness and more money or more of X or Y, the expectations are what kill you. So,
Hmm.
uh, in general, what makes you happy, even if it's less this thing, and
Hmm.
what makes you not sleep and not makes you sleep well at night. That's what I think you should do.
Hmm.
Um, what else? Well, I guess one of the other things I'd say, especially with your upcoming trader, is uh, just something that I discovered um, in I think the interview of Jack Schwager with um, uh, this guy. Who's that guy who had that famous statement of Ed Secuta?
Executor,
He
right.
said everybody has an uncle point.
Hmm.
This
Hmm.
is the point at which you lose so much money, so much
Hmm.
percentage of your money, that you
Hmm.
start calling your uncle for help.
Okay.
So this is the uncle. You have to find out your uncle point, okay? And
Yeah.
sometimes it is not evident in a market like the last 1.5 years, but
Hmm.
you find your uncle point
Yeah. Yeah.
and don't do things when you reach your uncle point. That
Yeah.
means
Yeah.
stop doing everything. Get out of everything that you've done and go and reevaluate life
Yes.
from perspective of कि क्या कर रहे हो.
Hmm.
Maybe what you're doing doesn't work for you, but everybody has an uncle point. People sometimes know their uncle point and then trade beyond it.
Yeah.
And that is what makes them go away and never come back to stock markets again.
Yes.
Because they couldn't stomach it. And it's the same फंडा नो कि बोलते यार ये जब स्टॉक ब्रेक इवन होगा ना तब मैं बेचेगा.
Yeah. Yeah.
क्या फायदा ब्रेक इवन होके बेचने का. माइट एज वेल से कि बॉस इससे निकलो, लॉस लो
Hmm.
और आगे वाला देखो.
Hmm.
But no, because they're waiting for them to break even so that they can take their money out, say that I didn't lose any money in this stock, and then call stock markets a scam and never come back.
Hmm. 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 Right. Right.
This philosophy doesn't succeed
Hmm.
in markets. So over time, you have to just find your uncle point and not do stuff beyond it. And um, basically, uh, for most people, the uncle point
Hmm.
is 30%.
Hmm. Hmm. Yeah.
Some people can last much longer than 30%.
Hmm.
But for most people at 30%, they start feeling like, okay, ho gaya bahut. So you put
Yes.
1 lakh, don't trade with 1 lakh rupees, it's too little. Oh, yeah, yeah. I mean, and in general, I would say find yourself proper trading capital. Yeah? Don't trade with 10,000, 20,000 bucks and expect to make a living out of it.
Yeah. Yeah. Yeah.
Yeah, these people go and buy options and lose all their money and then come back with some more 10,000 they've got from some other place and then buy options and lose more money. One day in 10 days, they'll win 10,000 becomes 50,000. They feel very happy. They proceed to lose that entire 50,000 over the next 10 days. This is
Hmm.
just gambling. This is not investing.
Yeah.
So
Yeah.
you have to trade with decent capital. And if you're a trader in India, you should have at least 5 to 10 lakhs
Yes.
minimum.
Minimum. Yeah.
Otherwise, don't even bother.
Right. Great, great. No, thanks. I think very, very sound advice. I think we'll we'll sort of move on to our audience round now. Deepak, I think maybe we'll spend the next 20 minutes, 25 minutes taking questions from the people in audience. So I'll request Viraj and Ujwal. Either of the two can go first. Ask your question, guys.
Hello.
Viraj, Ujwal. Yeah.
Yeah.
Who's this? Ujwal?
Yeah. Hi, Ujjwal here. Hi,
Go ahead.
Deepak. Thank you for the session. It was lovely hearing you. So I have one very basic question. Especially the things that you mentioned around optimizing for happiness and making sure to find your like the things that make you comfortable. So a bit about myself. I'm 27 and I've been investing from the day one, like from the first day that I got my salary. So it's been like 6 7 years that I've been regularly putting some money in some mutual funds. I was never sure of what to do, but one thing which I was constant with was putting it every month. And now when I look back after 7 years, I know for a fact that I am happy with whatever I've accumulated over a period of time. I know that it could have been more. I could have optimized for better returns and XYZ, but just the fact that I stuck to it for doing it for 7 years, I feel happy about it, and I feel that I have something to uh, look back on and rely on. Basically, I have a good corpus that way. But this is something which I used to think कि हाँ यार मतलब ठीक है मतलब डाल रहे हो हर महीना ठीक है. But when I see all people my age, even my friends and everyone, this isn't very obvious, like to a lot of people. Now, as someone who's managing other people's money, how do you correctly set these expectations कि भैया मतलब अगर 5 साल बोल रहे हैं 10 साल बोल रहे हैं तो डालो 10 साल. And because it again, like if I look at someone making 10x returns in a day, even I would be like, "Arey yaar, shit, like I missed it." So while it's very easy to say, it's very difficult to practice in real life, in day to day, especially with everything that is happening around us since the last 1.5 years. So how do you basically set these expectations right with people whose money you would essentially would be
A good question. I think setting expectations is a part of fund management of in general. That means if you don't set expectations right, you will lose AUM over time. Um, if you give the false view that your portfolio is going to be stable, then it's fine. So what we do I mean, you will lose AUM and you will hurt your customers. Now, what we do, for instance, is provide daily updates. कि portfolio ऊपर गया है नीचे गया है, comparison with Nifty, comparison with everything. People do look at it over time every day. We tell people, listen, देखो ऐसा है. We've actually done a calculation even on our momentum portfolio, which is our best performing portfolio, that we win less than 50% of the quarters that we've invested. That means every quarter, if I take the Nifty return versus the momentum return, less than half the time we have beaten the Nifty on a 1 quarter basis. That means if I say June to September, Nifty ने कितना दिया, momentum ने कितना दिया. September to December, October to December, Nifty ने कितना दिया, हमने कितना दिया. ऐसा we have about, I think, since March 2019, I think 15 or 16 quarters, but less than half of them we have actually beaten. However, the overall return for the momentum portfolio is more than twice the Nifty in the same time frame. That means we will not beat every time. Not only will we not beat every time, we will not even beat half the in a 50-50 chance also we are not winning. In the sense, it's not the probability of is not even 50%. And yet this portfolio beats. Why? Because when it wins significantly higher. And that's what it's done in the past, of course. But the idea is when it wins higher. When it loses lesser. So just that philosophy translates onto our messaging also. We say कि देखो ये है. If you want your to outperform in a week, in a month, in 2 months, in 3 months, sometimes 6 months to a year, we will not outperform. It can be like that, but if you're a long-term investor, this portfolio in the back test also shows the same thing, and in our actual performance also shows the same thing. You have to be invested for a while before it shows greater returns. This helps because the market, I mean, people generally, at least the customers we have, tend to be a little bit more aware. There will always be some who will have different expectations. Recently, we told one of our customers that we don't want to mislead you in any way. So I want to tell you this. आप ये समझो कि अभी आपका पैसा 30% गिरा है. You give me the money 100 rupees, it becomes 70 rupees right now. He's like, what do you mean? He said, it can happen. Now, are you going to take back your money or are you going to stay with us? So he's like, listen, I can't handle 30%. What is it? Then don't, you know what? This is not money you should risk in markets, because these are times when markets will cut 30% in 2 weeks. this is not a good time to invest in the markets, not with us at least. आप किसी और के पास जाओ, it gives you a different strategy which is downside protected, maybe, but not with us. But this is part of our process, and I think everybody should exercise this. Now you can't tell a friend. It's the problem with that is people feel at this point that they're invincible. You know, Apunich Bhagwana is is the theory right now. तो कितना बोलोगे? You know, ठीक है, अब आप कर रहे हो तो करो, हर आईपीओ में इन्वेस्ट करूंगा, उसका डबल हो जाएगा मार्केट में. आई सॉ दिस इन 2007 ऑल्सो. इन 2007 आई थॉट इट वाज मैडनेस, बट तब मैंने बोलने की कोशिश की, पागल हो गए हो क्या? अब मैं बोलता भी नहीं हूँ. आप करो यार, जितनी दिन खुश हो गए तो खुश हो गए, एक दिन आपको पता लग जाएगा. बट इन्वेस्ट for listing gains is a strategy until it's no longer a strategy. Why am I coming and ruining your day? Do it. No, one day you'll learn. Because you cannot tell a person who is going to become a parent how it feels to become a parent. You cannot tell a pregnant woman who has never been in labor before what labor feels like. Even if you give graphic descriptions of the whole process, people do the actual thing is way different, more crazy than you have ever imagined. So I mean, then by the way, I'm saying that as a guy, but I've heard this from women talking to me that they also like, okay, we knew that it was crazy, but we didn't know it to be that crazy. But the point is that it's the same thing with markets in the sense, it's not, of course, I'm not comparing in any way this pain, but I'm saying that you cannot tell a person how it feels, that this uncle point and all these philosophies, they have to experience it for themselves. So when they do is when they will need help. And the best thing you can do is be there at that time rather than now.
In fact, Deepak, there was a tweet that I had put out a few days back that there are some lessons in life you learn only when you get a tight slap. So I think there is no substitute for that in some getting some lessons in life.
Possibly,
Yeah.
yes.
Yeah. Okay, I'll invite Viraj to go next. Viraj, but before that, just a request to everyone for you and other questions that are coming up. Just be very precise with your questions. You know, the idea is we want to take few more questions, and there should be enough time. So be very specific and precise. Come to the point with your question directly. Yeah. Thank you.
Sure, yeah. So, Deepak, quick question, yeah. So, you've been managing money, I think, but major cycle has come just in last 1.5, 2 years. उसके पहले थोड़ा पैसा बन रहा था, थोड़ा पैसा नहीं बन रहा था. Suddenly, with the influx of money that you see, right, and kind of a lot of other PMSs have also seen, is a function of what has happened in last 1 year. Now, suddenly last 3 years, 5 years, 1 year, सब return ठीक लग रहा है. मतलब people think कि भाई 25% CAGR तो मेरा हक है, मतलब उतना तो बनना ही चाहिए. How do you kind of differentiate and try and differentiate somebody who has the appetite for it and who can stomach the drawdowns? क्योंकि बोलने में तो हर कोई बोल रहा है, right? So and kind of filter out the clients based on that.
It's a great point, Viraj bhai. And in fact, I think we're all, in the same boat, trying to figure out how to explain to customers that ये market सिर्फ ऊपर नहीं जाता है. And my thought process here is that you have to do your best. उसके बाद भी अगर लोग आते हैं with the misconception that markets will only give positive returns, then we can only try to say कि देखो, you can take your money out from us whenever you want. We have the concept of no exit load. So we say कि कभी भी, whenever you want, you can take your money out. It's the way it is. But we cannot guarantee that the money will always have a profit. There is no such guarantee. Even if you ask me कि मेरे को 10 साल बाद क्या positive return मिलेगा, I cannot give you that guarantee. It's the only thing that I can say. But there are many ways to kind of bring the message across. First is that we clearly tell people, देखो ऐसा है, markets are overbought in a way, or they have extreme amounts of excitement. But it doesn't mean you don't participate, you just participate more carefully. To give you an example, one of my customers he told me in January this year कि markets are over, कि I want to reduce my equity exposure, markets are overloaded. And we said, okay, let's do this, but let's not go to zero on equity, because you don't know where the markets can go. You want to put a fair balance to the whole thing. Let the markets tell you, and then you can reduce it, but reduce it to 30%, 40%, because his earning capacity is fairly large. So this is not a significant amount of money for him. But when he took that decision, he decided to go much more into debt than equity, substantially, and the markets then went up another 40%. So very recently he said, let's start getting back in. Now it's not a great time to get back in. So in his case, for instance, the way to do it is to do it slowly over time. It's benefited because last 1.5, 2 months, the markets have corrected and given us a better entry point for a lot of stocks, because the stocks we wouldn't be buying at 30% higher levels. Now we are buying because they've fallen 30, 35, 40%. That gives us a better way to, kind of get in. However, that's the only way that you can actually meaningfully solve a problem is to say, spread your investment over time. Don't put all the money in at the same time. And a lot of PMSs also try to do, we'll do a systematic transfer. सो आपका पैसा आएगा, हम लोग डेट फंड में डालेंगे, और डेट फंड से हम लोग हर महीना थोड़ा थोड़ा सा पैसा यू विल स्टार्ट पुटिंग इनटू द इक्विटी पोर्शन. दैट वे यू डोंट गेट इंडेक्स टू अ पॉइंट व्हेन द मार्केट इज एक्सट्रीमली हेवी, एंड विथ इट्स natural corrections you will possibly get a better entry point. However, you should understand that no matter what happens, you will still see a loss if the market corrects, which means आपने 100 में से 10 भी डाला, वो 10 का 8 हो जाएगा. That means you're lost the 2 rupees. But that expectation is the only thing we can do, and we try to tell them in many ways, especially if we get a feeling from our conversations that this is a person whose only view is that returns are going to be positive. We take a lot of care to try and tell them about. I mean, sometimes we'll have multiple conversations, multiple people within the company will talk to the customer before they become a customer, saying, "Dekho, are you sure? Because this is the thing." But beyond that, how much will you do? You have to put as much warning labels as you can. But sometimes, some people will come in for the returns and say कि नहीं, हम तो long term investor हैं, but they turn out to be more short term in nature.
Yeah, great. Darshan, go ahead, ask a question.
नमस्कार सर, दीपक सर. सर मेरा क्वेश्चन फैक्टर बेस्ड इन्वेस्टिंग के ऊपर है कि अल्फा जनरेटेड एंड द मोमेंटम में दोनों में से अल्फा ज्यादा रिस्पांस दे रहा है, लेकिन मोमेंटम को ज्यादा अच्छा समझा जाता है. तो आपका इस बारे में क्या व्यू है, और आपका एएमसी वाला का काम कहाँ तक पहुंचा? थैंक यू.
अच्छा, एएमसी वाला तो अभी काफी टाइम है, तो मतलब इट विल टेक अनदर ईयर एटलीस्ट बिफोर वी इवन आर एबल टू गेट अप्रूवल. सो आई डोंट थिंक कि अभी कुछ होने वाला है उसके बारे में. पर अल्फा और मोमेंटम के बीच में अगर आप देखें, मोमेंटम दोनों एक्चुअली थोड़े से डिफरेंट रीजन्स में अच्छा करते हैं. तो अल्फा लास्ट ईयर के जैसे अगर सिचुएशन रहा, अल्फा इज डूइंग रियली वेल in the last 1 year compared to momentum. Momentum is doing very well, but alpha momentum से better कर रहा है. लेकिन जो आगे जाके कैसे अल्फा परफॉर्म करेगा और मोमेंटम कैसे परफॉर्म करेगा रिलेटिवली, उसका कोई मेरे पास डेटा यही है कि अल्फा में थोड़ा सा वॉलेटिलिटी ज्यादा है. सो लो वॉलेटिलिटी अल्फा वाले पोर्टफोलियोज काफी अच्छा कर रहे हैं अभी. अगर आप देखें तो वॉलेटिलिटी एडजस्टेड रिटर्न्स लॉन्गर टर्म में भी अल्फा लो वॉलेटिलिटी में सबसे बेस्ट है, इवन कंपेयर टू मोमेंटम. सो आई थिंक इसमें मतलब लोग कहते तो हैं कि देखो अल्फा है, मोमेंटम है, फैक्टर्स हैं ऐसे. आई थिंक मोस्टली जो आपको जिस तरह से अगर आप मार्केट को देखो और उस मतलब if that philosophy works for you, alpha low volatility returns are less than alpha returns and less than momentum returns, but they are less volatility. So if you give that more importance than momentum, then or it works for you better, then you should use that. बट इसमें कोई ये चीज नहीं है कि आज ये अच्छा कर रहा है तो आप आज इसको देखो, कल कुछ और अच्छा कर रहा होगा तो कल किसी और चीज को देखो। ये भी आप कर सकते हो कि अगर टेस्टिंग में आपको रिजीम्स में नजर आ रहा है, हमें तो कोई मतलब ऐसा कोई फॉर्मूला नहीं लग रहा कि जिससे हम देखें कि मार्केट आज ऐसा है तो अल्फा अच्छा करेगा, मार्केट कल वैसा होगा तो मोमेंटम अच्छा करेगा। Sorry.
Got it. Harish, go ahead. Ask a question.
बिना बोले अपना पहले।
Hello. Yeah, Harish, or are you there? Okay, Lakhan, go ahead. Lakhan, go ahead. Ask your question.
हाँ जी, नमस्कार जी।
Lakhan?
हाँ
Yeah.
नमस्कार जी।
Who's this? Harish? Who's this? Harish or Lakhan?
हाँ जी लखन जी, नमस्कार जी।
हाँ, बोलिए।
हाँ सर जी, हम एक दूसरे को फॉलो कर रहे हैं।
आपका सवाल पूछिए लखन जी, थोड़ा फास्ट।
हाँ सर, ये फॉलो बैक के लिए वो बोला गया है।
Anyway, I don't think लखन जी आपका कोई सवाल है तो पूछिए, वरना मैं दूसरे को इनवाइट करता हूँ।
चलो
कंपाउंड प्राइम, गो अहेड।
ठीक है जी, दूसरे को इनवाइट कर लो आप।
कंपाउंड प्राइम, गो अहेड, आस्क अ क्वेश्चन। और श्रीधर, if you want, you can go ahead. Sridhar or compound, any one of you. Yeah, who's this? Sridhar?
Sridhar, yeah.
Go ahead.
Yeah, Deepak, thanks a lot for the current conversation, also all the work at Capital Minds, and also I think the whole community work you have done from Delphi days. So thanks a lot. The question is, whatever I think I know there are two ends in the investing. One is like Buffett world, everything like valued, checked, and decisions are taken slowly, and the renaissance technology and where everything is like coded or automatically, and both have proven to be really great models. I mean, we don't really see any next to them with that huge success what they have got. So I mean, one is why somebody is not able to do it at that scale, and second is going forward. Do you think the renaissance will be more because there are a lot of complexities in the world and everything changes so quickly?
So I think your first question was why isn't anybody as big as Rentek or Warren Buffett?
Deepak, I don't think he can speak now. I've removed him because after the question I remove him. Sorry.
Achha, no problem. I was just wondering. So, okay, let me just give an answer. I think a lot of people think that people don't make as much money as Warren Buffett because, as a money manager, if you may, because they don't have the skills or the things like that. I think mostly people just get tired of doing it. If you saw the movie The Big Short, you would have seen that the guy, who was that guy who managed that money, the Big Short film?
Was it Dunn?
No,
Michael Burry.
Michael Burry. Yeah. So he got so many threatening calls from his investors. He got so much because they were impatient. They wanted to take the money out, and his money was in illiquid stuff that he knew would eventually make money, or he at least had the conviction to do it. He eventually made a truckload of money, and then he stopped. Because managing other people's money and expectations is a pain in the neck for him, and for a person like him who has deep drawdowns, who's not really keen to, he's like, boss, trust me. Or give me money that you don't mind losing for the next 10 years, but otherwise don't, hammer at my doors and say exit and all that stuff. This, I think, is a philosophy that a lot of large fund managers who make a reasonable amount of money on their own, they say, done, I'm done. I don't need anybody else's money to manage. My own money is good enough. I'm done. So they don't necessarily want to become Warren Buffett. What will you do after you earn 40-50 crores? There is nothing in India that you can do, or even in the world, that you can do meaningfully with most of your lives. And I say this for like 99% of people in the world or in India or whoever listening to this conversation, you will not be able to spend that money in your lives. And you will not, because that's pretty much the end of the story. So if it becomes 100 or 150 or 200 or 300, what difference does it make in your lives? So you'll stop, because at some point it'll be like, this is too painful. I'm not going to do it. So Rentec does it for largely its own employees. It's become big of its own, but so has so Citadel manages now more money, and the Rentec it stopped the fund at about 5 billion. There are other funds like Ray Dalio's which used to manage 100 billion or 50 billion or 60 billion, some crazy number of that. So it's largely dependent on the ambition of the person that's managing it, that declares whether they stop at some point. And I don't think you should blame difficult outcome, even for a Warren Buffett. So, and I also don't think these are necessary people. They're just survivors. One of the few people who had the ambition to take it up all the way. Not necessarily the most useful people to emulate. And whether which one of these two will succeed going forward, the answer, according to me, is both types will. There'll be a third type also. Tomorrow's biggest investor may be a crypto investor who earns tons of money using a completely different strategy. फिर वो भी हीरो बन जाएगा, उसके भी बुक आ जाएंगे. So, I think we should expect the unexpected, in the sense of don't expect that what happened in the past is going to repeat exactly like it has in the future.
Yeah, yeah. Nilesh, go ahead, ask a question.
Hi Deepak ji, Nilesh here. So my question is a little bit related to dollar index. So we have seen 96.70 odd close on a weekly chart, and if everything was a surprise this last year and almost like 2 years, can we go up above 100, 102, 104 and supersede up to 120 or so? And what could be the after effects of this, sir? Thank you.
Thank you. I don't have levels. I haven't seen the chart, to be honest. And I don't have, I don't, plot levels that says this chahiye, karna chahiye and all that stuff. But if you say can, of course it can. But question is, what are you going to do about it? In the sense, would you trade the dollar in right now? It looks like the dollar is in momentum across the globe. So it makes sense to take a position, but to do from 96 to 107 is a huge play. I think I don't know if the chart indicates that kind of a move, trending move, but if that's the case, then you might want to build a position on pyramid in, if you're trading the DXY or if you're trading the USD INR. But personally, I mean, I don't know. At best, if the dollar gets so strong, we might end up with some imported inflation, which can complicate matters for us in terms of interest rates, in terms of economy, and in terms of it will slow everything down. It will slow everything down worldwide, I think. But I don't think it will happen because the central banks are too aware that this kind of volatility is dangerous, and they will work to prevent it. So I don't think the dollar will be allowed to get so strong that it causes unemployment in the US. It will not be allowed to cause extreme amounts of pain in the European countries through imported inflation either. So I don't think politically it's a desirable thing. Economically, of course, anything can happen. And if it happens, the impact of it is going to be much higher for developing countries than it is for developed countries. So in terms of inflation and interest rates, it's a more macro thing than it is a market thing.
Okay. Deepak, with your permission, I'll maybe take last 4 or 5 questions. We might get extended to by another 5-10 minutes. So I hope that's okay with you.
हाँ चलेगा चलेगा.
Thank you. Thank you, Deepak. Accidental investor, go ahead.
Hi Deepak sir, thanks for sharing your insights. I have a small question like for beginners, what would be the best way to go about studying valuation? I mean, how to go about it?
Currently, the answer to this question is you take a piece of paper, you write a number on it, and that is the valuation. कोई फर्क नहीं पड़ रहा है यार, तुम कुछ भी कर लो, कुछ भी कह लो, कोई भी एक्सेल फॉर्मूला यूज कर लो, वैल्यूएशन आ जाता है. But in a bull market, valuation is nothing. In a bear market, nobody cares about valuation at all anyways. It doesn't matter how good a company is, it will go down in a bear market. So the theories of valuation are different from the practice of valuation. अब ट्विटर पे आजकल तो क्या होता है ना कि बुल मार्केट में ज्ञान भी बहुत ज्यादा हो जाता है. यार मैं प्रेडिक्ट करता हूँ कि ये कंपनी 2x सेल्स से 15x सेल्स हुई. कैसे पता यार? किसको पता? सेल्स कोई मेट्रिक भी था वैल्यूएशन में कि किसी इन्वेस्टर को अपने MSCI इंडेक्स में पोजीशन बनाना था इसलिए आपका स्टॉक खरीद लिया? यू डोंट नो. मोस्टली द आंसर टू वैल्यूएशन इज फ्लोट इन इंडिया. फ्लोट का मतलब है कि कितने शेयर्स प्रोमोटर्स और इंस्टीट्यूशंस के बाहर है, मतलब रिटेल इन्वेस्टर्स कितने हैं. जितना कम रिटेल इन्वेस्टर्स के पास होता है, और आपको ये डेटा पता नहीं चलता क्योंकि जो PMS वगैरह खरीदते हैं स्टॉक्स, वो रिटेल इन्वेस्टर का नाम ही होता है उसमें PMS का नाम नहीं होता है ओनरशिप में. बट द नंबर ऑफ रिटेल इन्वेस्टर्स अ कंपनी हैज टिपिकली द एबिलिटी फॉर इट टू गेट हाई वैल्यूएशंस इज रिलेटिवली स्मॉल. The more cornered a float is, the valuation will generally be higher. So that is true across the world, whether it is stocks or crypto or anything like that. But the more you think that the valuation is based on some theoretical aspects, you might get confused कि ये market इतना undervalue क्यों कर रही है. मेरे पास ऐसे stocks हैं जिसके market cap उसके cash से कम है. That means if you bought the 100% of the company, took over the company and went to its bank account, it would have more money than that amount you spent buying all its shares in the bank account. Imagine a company having more cash than market cap. ऐसे में क्या valuation करोगे आप? So to a certain extent, all valuation techniques should be taken with a pinch of a lot of salt. So दिल के बहलाने को ये ख्याल अच्छा है टाइप करना है तो फिर तो बहुत सारे टेक्निक्स हैं. मतलब you can do DCF, you can do growth metrics based, you can do something else. So in the end, you have to make some prediction or the other on valuation. So you can value it based on peers, you can value it based on potential earnings triggers and growth. Those are different valuation techniques. But I would generally say, because of my relative experience in this market of seeing valuation models collapse in many ways in bear markets, and everything works in bull markets. मतलब Excel sheet पे आप is equal to rand डाल दो और वो भी चल जाएगा valuation में. Because of that, I place little less emphasis on valuation techniques. अब एक चीज को value किया जाता है which is debt, but I don't think you were talking about debt. So I will just say, the valuation models which work, there are hundreds of them, study them, but ऐसा study करो कि जैसे कोई आपको life ज्ञान दे रहा है for something that does not or works only 50% of the time.
Yeah. In fact, Deepak, in the recent Nykaa IPO, I thought there was also some valuation. In the valuation, I think they had considered FY41 financials also, some projections for FY41. So, yeah.
क्या करो यार, बेचारे को मतलब valuation देनी है तो कुछ तो लिखेगा.
I know.
अब लगा दो फिर FY90 तक भी लगा दो, उसमें क्या है? वो तो फॉर्मूला है, तो चलाएगा. मतलब you see, once you understand that the business of predicting is a business of probability, which means your figures can be wrong for the next 3 months by only 1 or 2%.
Yeah.
The figures for the next 1 year can be wrong by 10%.
Yeah.
The figures for the next 20 years, because of this exponential thing, can be wrong by 800 or 8,000%.
Yeah.
It can be 80x higher
Yeah.
or 1 by 80x lower. So once you do that, फिर तो क्या prediction का value क्या है?
Yeah.
लेकिन करना तो है, किसी को नंबर तो चाहिए, तो लिखोगे आप नंबर.
बिल्कुल. Right. Samit, go ahead. Ask your question.
Thanks, Gordon. Deepak, first of all, congratulations on your first book. Look forward to reading it. I'm sure it'll be a good one. The question that I have is both about India investing in global markets and also about the global market investing in India. So, firstly, I think the Indian stock market cap is maybe 2 or 3% of the total global market cap. With our immense focus only in the Indian market, which I understand we understand much better than the global markets, aren't we behaving like frogs in the well and missing out on the larger global opportunities? Number one. And linked to that also is off late I've seen that while FIIs are exiting the current positions the last few weeks, but DIs are equally investing. So, what do you see the play of global players in the Indian stock market now? Are they getting weaker as our domestic market gets stronger?
Interesting thought, Samit, and I think I'll address the second part of it first, and then I'll go to the first part. So I think one of the things that are happening in the Indian market is specifically that the FII exits which have happened as far as November is concerned was not a troublesome thing, because in November, most of the exits that were happening in the secondary market, which was in the stock markets, was getting replaced by their investments in the primary markets, which is the which is the IPO market. Now, I don't know about December, I haven't tallied the data in, but assuming that they have sold 4,000-5,000 crores, it would still make, I think, 2018, if you consider primary plus secondary, 2021, primary plus secondary would still be one of the largest years in FI investments in total. So the last few months have been a little bit tempered down. And only the last 15 days, I think you've seen a net of even the primary issues, a net outflow. This is also why the rupee has been stable in November at 74.5, and now it's reached 76 in the last maybe 10 days. So this, according to me, has come primarily because the net outflows have only started now, and it's December, so you can't say too much about it because volumes are generally weaker. But I feel that every FII exit time, that is 3 or 4 months of exits, doesn't always coincide with a negative return for Indian investors. Sometimes FIIs also just reallocate between different countries. And recently, China has taken a much bigger hit than India. It is one of the best performing both currencies and I think stock markets also in 2021. So relative performance wise, I think other countries become more attractive for subsequent years. So given this amount, the net amount that has gone out, which is 4,000 crores, that is nothing. In the overall scheme of things, 4,000 crores less than $1 billion, or maybe even, let's say 10,000 crores in net or 15,000 crores, is still 1 or 2 billion, which again is nothing. So the relative amount of money that's gone out is tiny for the global world, but very big for India, which is why our stock markets correct a little more violently when FIIs exit. But for them, it's like, I'll take one tiny thimble from one India pocket and put it into the Malaysia pocket, and India falls like 5 or 10%. That is how small we are compared to the whole world. So in that context, I think this rearrangement is more reflective of the lack of depth of the Indian economy and the markets compared to the fact that FIIs are pulling out and want to exit India. I think that is the takeaway I have. The other part of it is whether India itself is should be investing abroad. I think that is definitely a necessity because most of the innovation, most of the growth seems to be happening in markets outside of India. I'm saying most. India is having some innovation, but कितना मतलब हम लोग ग्रोसरी 10 मिनट में दे रहे हैं, ये हमारा इनोवेशन है. Versus actual innovation is like आर्टिफिशियल इंटेलिजेंस से कोई मतलब आपका घर साफ करके चला जाता है, वो नहीं हो रहा है. लेकिन ग्रोसरी हम 10 मिनट में दे सकते हैं. So we are at a different kind of a world to the rest. So we should not ignore, we should not be frogs in a well, we should invest abroad. And today there are easy vehicles. ये आपको LRS करने की जरूरत भी नहीं है. You can buy like an S&P 500 or a Nasdaq 100 or a China fund or a emerging market fund from India. A lot of mutual funds allow it, and as low as 5,000 rupees you can get invested. So I think it's criminal to not invest in countries abroad. It's also criminal that some of these options are expensive, but that we can fix over time as more competition comes into place. But I think today it is meaningful and big that Indians are allowed to invest abroad through these mutual fund routes and directly also. And also that we can take exposure to companies that are new and in new spaces that India does not have corresponding parallels in, whether it is, say, crypto, biotech, gaming, or even, marijuana, which is legal in the US, and therefore there are listed companies that are doing interesting things around it. You can't get any such, commonality of access in India. So you should use those routes to access those kind of exotic investments. So maybe the way to do that is to get yourself an account with a US brokerage and do it. But I definitely think that is a good thing. And India has way too many dollars, yeah, to be honest. तो कुछ तो मतलब बाहर जाके इन्वेस्ट करेंगे तभी तो मतलब उसका फिर it will get returned. Otherwise, unnecessarily, we're just funding the US government at this point with our dollars. So might as well make some money for ourselves by using this to invest abroad.
Yeah. Karan, go ahead. Ask a question.
Hello, am I audible?
Yes. Yes.
Hi, Deepak sir. I've been loving your spaces. I have three questions. First is, sir, what is your sales strategy? I have been struggling with the same thing that I don't know when to sell when the valuations become absurd. If you can give any example. Second is, what do you think about the platform businesses and the exchange businesses that they have quite run up quite a lot in past 6 months and they had done nothing past 3 years? And third question is, what do you think about the steel sector and the metal sector, the way they are deleveraging their balance sheet? Do you think that there's a value in them? Thank you.
There's a lot of questions. I don't think I'll remember all of them, but I'll try and get it quickly.
No.
Sell for 3 reasons.
I'm keeping him on as speaker, so in case you forget, he'll remind you.
So here is the thing. Sell strategy. Why do you want to sell? You sell only for 3 reasons. One, you need the money because for whatever reason you may need the money. Second, you have better opportunities. So you get out because they're better opportunities. Third, something fundamental has changed. That means the reason why you took that investment no longer applies. It could be because it's a value investing stock and वो सारा पता नहीं corporate governance में कुछ झमेला हो गया तो निकल गए, या फिर आप टेक्निकल में हो, आपका स्टॉप लॉस लग गया, आपका इन्वेस्टमेंट नो लॉन्गर वैलिड है तो आप निकल गए. सो ओनली दीज 3 reasons. Anything else is arbitrary. So I would say put that as a strategy. That's all. Then you can evaluate everything. बेचना है, खरीदना है. Not, don't do things like यार will I buy this stock at this price? If no, then I should sell. That is a stupid thing. It doesn't work. You will just sell too early. That's all. Because too many stocks run up way before their fundamentals catch up. So you will end up doing silly things. So simple funda, 3 things. You need the money, something fundamental has changed, or you have better job opportunities. That's all. The second question was, I forgot the second question.
Second question was based on the exchanges and the platform
exchanges
business.
and exchange platform is so हर time पे कुछ ना कुछ चलता है. Now whether these businesses live up to that game or not, we'll have to see. But technically, most exchanges in India are under penetrated because आप क्या सोचते हो कि अभी क्या टर्नओवर होगा एनएससी का? फॉरगेट द फ्यूचर्स एंड ऑप्शंस, बट स्टॉक कैश टर्नओवर इज आई थिंक अबाउट 70,000 crores. In 2007 it was 35,000 crores, 35,000 crores. It's only doubled in 14 years. In both were bull markets. So if that is the case, 14 years में double होना is a 5% growth per year. India's economy has grown much more than that. Today, less percentage of GDP is invested on a daily basis in the markets than, or traded on a daily basis in the markets than it was in 2007. So there is obviously room to grow. And I have said also earlier, I think I talked about how small we are, कि 4-5 हजार करोड़ हमारे मार्केट को हिला देता है. So that I think will change. So if it changes, and it only can change in a positive way, these exchanges have rooms to grow. Maybe the valuations are high, but maybe with the room to grow, they can justify those valuations over the longer term. They're extremely efficient businesses. The growth is almost 80% going to bottom line because most of the fixed costs has already been done. Increasing volume only increases their profit margins, which is why people are gung-ho about them, I think. So, yeah, I mean, that could happen. But also remember, momentum is on their side. Float is less. Institutional ownership is very high. So that means कि कोई बेचने वाला ही नहीं है तो स्टॉक गिरेगा कैसे? So that is the other reason. Now, steel companies, steel prices already started dropping. I think through October end to early November, they dropped and they rose a little bit. Now they're starting to drop again. I think the cycle's done. I think we should see, and I was saying this in August, September also, it looks like the up part of the cycle is pretty much reached. We're going to see a move down, and I think it's happening. It's done. The cycle is over. The good thing is the steel companies are substantially lower leverage now because they've returned a lot of debt. A problem ये है कि steel companies सारी मतलब they behave the same stupid way, which is जब पैसा होता है they go and invest in more capex in steel. This is a stupid idea because if you put more capex into an industry that is only temporarily facing a supply issue because of these supply chain challenges around the world, you will end up with more capacity at a time when supply chains have come back online and all the supply will add to prices crashing. So you'll have more capex, lower market price, you'll have to run at lower efficiencies and still keep paying debt. So any steel company that is taking more debt to put more capex today, avoid it like the plague. But unfortunately, all of them are doing it, so I would advise the whole sector on it right now. So right now, I am not very interested in it. But मतलब market has multiple views. So जिसको जो करना है, I think justification होगा उसका.
Right. So Deepak, we are on to our last two questions. So Mithil, I'll take the question from Mithil, which is the second last, and then one more. Mithil, go ahead. Ask a question. Mithil, are you there?
Yeah, Deepak, the question for you is that a lot of things have been spoken about return on equity as a parameter to invest in a company. But when we invest in IT company, the return on equity is almost like infinity, right? I mean, there is no equity involved in an IT company. So your comments on that?
Or I'm not sure if I understood that question. The return on equity is about 35-40% as far as I know.
For an IT company?
No?
Why is it so? I mean, is there any equity involved in an IT company?
You have, no? You have a business. You build a business over time that has that equity, right?
Okay, but that is just the cash flow which is given out as a dividend, and there'll be no equity there, right? So, I mean,
no. The equity is basically the net worth of the company.
Yeah, exactly. But I mean, for developing a software, you don't need an equity, right? So
why
human brains
people,
that is.
Have you seen the salaries in Bangalore? My God, of course you need equity, man. कुछ तो चाहिए.
Yeah, but that is all operating expenses, right? I mean, it does not count in equity like what we put in for a machinery or something. So
Why? No, no. If you build a product, you'll take the salaries that you use to develop that product as equity. No, you'll capitalize those assets, those costs.
so
You
they do
have to because
capitalization.
they've been used to.
I mean, they don't
Yeah,
have any fixed assets as such. I mean, NFI or
you don't
TCS
need
or
fixed assets. This will be intangible, but this will be WIP.
okay, okay,
Most under Ind AS, you have to take capitalized assets which you built into a product. So if you build a product
yeah,
and that product is an asset in your balance sheet, then what is
okay,
the cost of that? I mean, how have you built that asset?
okay, okay. Yeah, I get it. I
So
get
there
it.
will be some asset. So there will be some equity. I mean, it's not. It's like net, but in the end, return on equity is return on net worth.
Yeah.
So your net worth will be positive because maybe of retained earnings, and that retained earning itself will contribute to a positive number in the denominator. So your equity will not, your ROE will not be infinite. Technically, it could be perhaps if you return all the cash you make as dividends. But even then, I don't think so. I don't know any company that can have an infinite return on equity in India, at least.
Yeah, yeah, yeah. Amit, go ahead. Ask the last question for today.
Yeah, hi Deepak, hi Gordon. So, this is regarding momentum. So, recently I have read one like paper from Alpha Vantage, US based fund manager. So, they have talked about something called momentum quality. So, in that, they have compared like two stocks which has given same returns, and but the difference is that both have different volatilities. So they have preferred the one with low volatility. So like for US market, they have studied that low volatility screening has given them maybe lesser returns but much lesser drawdowns. So is there any study for Indian markets or thing?
I haven't done any. In fact, I think India should study, in general, you should study something called downside volatility more than uh, volatility as a structure. Because I don't mind a stock going up 50%. My problem is if it goes down 50%. मेरे को अप में कोई volatility का कोई problem है ही नहीं. So give me a measure that says, downside volatility I will measure and I will give you low downside volatility. I don't care about upside volatility. So the way that people calculate volatility is they use a standard deviation, let us say. A standard deviation is the wrong measure because a standard deviation is the sum of the squares of the distance from the average. The reason they do that is because negative return का square करो तो positive होता है, positive return का square करो तो positive होता है, उस सारे को add करो फिर उसका square root ले लो. That way they can calculate volatility at both sides. मेरे को both sides का नहीं चाहिए. So I don't mind just taking the volatility of one side and then calculating whether that is a strategy for better upside returns. Um, Maybe that is something that's useful for India. I haven't heard of any of these studies. There is a ratio called the Sortino, which gives more, cognizance to downside volatility than to upside. But I think a lot of theoretical work is being done on this, and we should do more of this for India. Um, if anybody comes across such a study, please point it out. I'd love to read it also.
Yeah, sure. So just adding one more point that the how they have calculated the quality of momentum. As you said, normally we calculate the standard deviation as volatility, but which I have read also that in that paper that they only calculated the negative days, and I think how much negative days and how much like the what do you say the percentage loss on that day, and they have I think compared against that time.
Amit,
So
Amit, I guess what we can do is you can take that offline. Maybe send a DM to Deepak.
Yeah,
Maybe you can take it offline. So I would just like to sort of wrap up this. Deepak, first of all, I think really a big thank you for joining and being so elaborate and transparent in your responses. I personally loved it, and the knowledge that you have shared is something which is, I'm sure a lot of people would have benefited. I certainly have. So thank you, Deepak. Thanks a lot for taking the 2 hours out of your Saturday evening and spending with us. So I would also like to thank everyone for joining in and staying till the end. And I'm really thankful to them. So this is going to be my last space for 2021. I'll definitely be back next year in January with other exciting speakers. But Deepak, thanks again, and have a great night and have a great trading week ahead and investing week ahead. Sorry.
Thanks, Gordon, and thanks everyone for having listened in. Have a great weekend, great uh, last days of this year, and happy 2022 to all of you.
Thank you. Thank you, everyone. Bye bye.